Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Now let's take a look at some of the stocks on the move today in Europe. I'm Lizzie Burden with Stephen Carroll, and we're joined by Bloomberg's breaking news editor, Louise Moon. Louise, I want to start with Diageo. The top team might want to have one of their own stiff drinks after this set of numbers.
Indeed, yes. So the focus is really on ahead, what's next. So Diageo have cut guidance for the second time this fiscal year. They also cut their dividend. That's to shore up their own balance sheet. And it's not being taken too well by markets. So shares slumped. They are the biggest faller on the FTSE 100 at the moment, extending losses over the past year. So not being taken too well. Essentially, this is all Diageo continuing to grapple with ongoing challenges that it's been facing for a while. So that's, changing and waning demand for alcohol, particularly a slump in China, tariffs, increased competition. So they're facing a lot of headwinds. And while a reset kind of wasn't expected today, it kind of laid bare the scale of the challenge of a recovery. Obviously, they had a new CEO who came in at the beginning of January, Dave Lewis. He's his nickname Drastic Dave. He's known for his turnarounds at Tesco and at Unilever, so quite a lot of expectation there as to what he will do. He said on various calls with reporters, he said that the dividend cut was hard but necessary. He's working on an updated strategy, so that will come later. He's pledged to act, in his words, more decisively to boost both Diageo's competitiveness and also broaden its portfolio out. And he said that there will be some disposals. Diageo has already been cutting some units. He said that there will be some disposals when needed, but they won't do that cheaply. They won't do that on the cheap. And he sees, more opportunity in more what he calls mass market drinks. So there's a potentially a lot of change coming, and that's what's really what people are really waiting for, what he's going to implement as CEO given his past. But what's really being focused on this morning is that cut to guidance and that cut to the dividend.
Okay, so that's on Diageo. Their shares down 5.8% at the moment. Let's go to Santander next. And their earnings out this morning as well.
Yeah, so big numbers from Santander this morning. They have vowed to grow their net income to more than 20 billion euros in 2028. So analyst forecasts had been for just under 19 billion. So quite a bit bigger than that, 1 more billion, just over 1 more billion bigger than that. Their net income last year, for a bit of context and comparison, was already at a record. That was about 14 billion. So really a push ahead for their financial targets going forward. Profitability has already surged over the past few years, partly due to higher interest rates, and their shares more than doubled in 2025, so they're already doing well, but boosting those financial goals. And this all essentially follows their buyout of a US lender, so that's Webster Financial Corporation. That was the largest takeover of a US bank by a continental European bank. Obviously increases their customer base, and on the back of that, they're really boosting those financial targets. So shares in Santander rising in Spain this morning.
Now, Louise, I'm sure we all fantasise about how much our colleagues are going to cry when we leave a job. Not that any of us are planning to do that anytime soon, but the CEO of Trainline seems to have made the market cry.
Shareholders are crying.
Shares, they're going.
Shares fell over 8% this morning for Trainline, which is obviously the ticketing app in the UK. So that was after their CEO, Jody Ford, said that he plans to step down. He's been in the role for about 5 years, so a search for a successor is in place. And as I say, shares falling on that news, so not being taken well by the market. They hit the lowest level since March 2022 this morning. So under him, Trainline essentially has been doing well. Ticket sales roughly doubled in the UK. The international business is also doing well. They entered new markets, so places like France, Spain, Italy. So not being taken well. JPMorgan saying it's untimely. They say that Trainline is facing quite a challenging chapter ahead. There's, nationalisation potentially of the market in the UK. There's more competition. There's AI. So despite them reconfirming their guidance, that wasn't quite enough to distract from the CEO change. So shares falling.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.